Welcome to this week's video of your stock request for the 13th of February. Hi, I'm Michael Gable, Managing Director at Fairmont Equities. Your stock request is the weekly video where I take your requests and analyse the share price charts. So this week we have Catapult, NRW Holdings, Paladin, Retail Food Group, and Sun Silver. So if you have a request, please send it through. Make sure you've signed up to the free newsletter, but our best recommendations come out every Tuesday in the Dynamic Investor Report. So make sure you're getting that report. And if you do enjoy these videos, we'd love you to share them on social media or even leave us a review. Our main business is in portfolio management, so if you'd like to have a trading account with me, then please let me know. And all the advice here is general only. So we've got the daily chart here of Catapult. We can see that it remains in an uptrend. This is one that we've been trading throughout the year. Most recently, we could see that, look, it did run too hard there in November, so it needed to consolidate, and we ended up with a sideways consolidation. And then we could see that it sort of end of January broke out of that sort of consolidation there. It's sort of come back to retest it and has bounced off it. So look, still looks like it wants to head higher, and I think this recent weakness is a buying opportunity. NRW Holdings, NWH. So look, trending well up until recently. Obviously that uptrend now appears to be over, especially in light of this sort of gap down in January, especially on big volume. In terms of what it's done since then, we could see that it's sort of hanging around the lower end of this trading range. It's near that January low, which isn't ideal. Ideally, you'd want to see at least trading up here, so showing a lot more support. So it does look vulnerable. I think at best, it needs to turn around quickly here. Otherwise, again, just maybe just sideways for a while. But that's at best. It looks like it's at risk of potentially heading lower. Paladin, so obviously good run sort of last year, mid-year, and then we've had the pullback. So broke that uptrend, fell back. Now this sort of sell-off here looks like it's made an exhaustive low. So you've got, so the most recent low occurred on a sort of a big gap down, closed pretty much near its lows, but on a huge spike in volume. And then it instantly bounced back and hasn't been near that low. So it looks like a sign of exhaustion, which is a positive. Now it's making the higher highs, the higher lows. Recently hit, sort of filled that gap and has eased back, but it's still just holding in there just under that resistance line. So consolidating here, I think a break above this line should see it. Potentially you'd be aiming the next gap, which is just near $12. Retail Food Group. So if we have a look at the weekly, look, last few years just obviously going nowhere, very, very volatile. I mean, in terms of what it's done in the past. Sort of last year we see like clear sort of selling pressure. Every time it rallies up in this region, you just get very strong selling, and price action recently still looks very poor. Maybe you get a short-term bounce as it approaches these lows, but it just looks like the risk is still to the downside. An SS1, so that hasn't been listed long. This is all we've got. So we could see poor price action in November. So big sell-off. It tried to rally, but then sold off again and breached that low. So that's quite a negative. And then it's sort of struggled to get going here. And once again, it's is it turning around here? Is it going to give us a lower high? So that's the risk there. If we treat that low as support and this high as resistance, we could see it's sort of in the middle of that range. So it's neither here nor there. I mean, as a buying opportunity, it's just not yeah, it's not a great setup. If it comes back here and holds, different story. But at the moment, the risk does look to the downside. Okay, that's all for today. If you have a request, send it through. We'll try to cover it next Thursday.